Welcome to today's episode of The Irresistible Factor. I have a special guest today who I also consider a friend. I'd like to introduce Carol Frank. Carol is a very, very impressive lady. She's started and sold 3 pet companies and then also leveraged her background as a CPA and pet industry entrepreneur and founded Birdseye Advisory Group, a boutique investment bank that helps pet company founders and entrepreneurs with mergers and acquisitions. So she's going to have lots of great things to say and lots of good advice for founders. So welcome to the podcast, Carol. Thank you so much for being with us today.
Thank you, Christy. I'm super excited to be here. I know we've talked about doing this for a while, so here we finally are.
Yes, here we are. So why don't you start by just sharing a little bit of background on yourself, and then we can talk a little bit about the industry and how you see it sort of unfolding.
Yeah. So as you mentioned, I started my career as a CPA, and while that was a great background to have, I quickly realized that this was not the right career for me. So while I was getting my MBA, I had to write a business plan for an entrepreneurship class, and I wrote it on a pet store. And this was the late 80s, and it was way before the pet industry had exploded. But I saw at the time the need for something better and different, and so that was like I said, the late 80s, and the pet store ended up being very successful, but retail was not quite the right fit for me. It's kind of crazy chaos most of the time, and I was looking, for something a little bit more stable. So I sold that, started a wholesale distribution company for pet products.
Wow.
I owned that for 8 years, and then during that time, while I was distributing products, I could never get enough bird cages. I'm a bird fanatic. That's my little guy behind me, and I love birds so much. And I decided to start a birdcage company of my own so I could have enough bird cages to sell my retailers.
Wow.
So I started Avian Adventures in the late 90s and owned that for 11 years, and then sold that to a strategic buyer, a pet company called Midwest Homes for Pets, 2007. And then 2 years later, I started my career as an investment banker, focusing exclusively on pet companies. So that's what I've been doing now for the last 6 years.
Make that transition from what you were doing to investment banker. That seems like a big leap.
Well, I call it serendipity, Christy, because having a background as a CPA, MBA, I know business really well. I've also always loved the deal. Like, my favorite part of owning companies was business development and making deals, making things happen. So I met a guy who was working for an investment bank here in Denver. I live in Boulder, Colorado, and I met him at a kind of a random event. And he goes, "Oh, I work for this investment bank. We just did a pet industry investment, and we'd love to talk to you." So that is how I ended up becoming an investment banker. I got introduced to a firm in Denver called SDR Ventures, where I started my career, and was there for 5 years, and was with a larger firm that's called MHT Partners, now part of Cowen, for another like 4.5 years, and then launched my own firm in 2019. But yeah, it was serendipity, but it's been the best thing. It's a great fit, and it's crazy. Most of the time it's wonderful, but mergers and acquisitions can be very stressful as well. So, but it's a good fit for me, and I love it.
So talk about how you go about figuring out what the right brands are and who the right investors are. How do you decide when something's worthy of your time?
Well, we over the years have developed this I have a colleague, Erin, and we've kind of developed a sweet spot for what we believe is the right fit for our skill set in our firm. And those are pet product companies that, when we work with them, they tend to be more than 10 million in revenue. They're probably earning at least $2 million to the bottom line. And they're growing, and they have either a good brand or they're good manufacturing. I mean, we don't just sell brands. We also sell, like right now I'm working on selling a co-manufacturer for pet treats and food, but anything in the pet industry. So we love working with founder entrepreneurs, and they love working with us, because my colleague worked for me for many, many years at my birdcage company.
Oh.
And we know the industry. Like, between the two of us, we have over 50 years experience in the pet industry.
Wow.
And so one of my favorite sayings, Christy, is there are riches and niches. And I really love the idea that we kind of own that niche of that kind of 10 to 75 million a year in revenue, pet products, Luckily, I've been in the industry a long time. I've served on a lot of boards. And one of the things that when I often speak to MBA classes, and I let them know that one of the things that made me successful was I volunteered for all of our trade industry boards. And I got to know a lot of movers and shakers and a lot of players. And those connections have been invaluable to me over the years. So, so people kind of know who we are. Write articles. I do interviews. These sort of things. But then in terms of the actual buyers or investors in these companies, just over the last 15 years, I have just built a huge Rolodex of both what we call strategic investors, which are pet companies that are looking to buy other pet companies,
Yep.
or private equity, which there are many private equity firms interested in pet. So I have probably close to 1,000 names in my
Wow.
space. Yeah.
Wow, that's incredible.
Thanks.
Talk about the pet industry. I mean, you just said there are thousands of private equity people and interested in pet. The industry has changed so much since even in the past 5 years, I would say it's changed so much. Talk about what you've seen though, because you've been doing this for a while and it feels like it's accelerated at a crazy pace.
Yeah, it is amazing. When I joined the industry in 1987, and I had to write a business plan on the industry, and I did my pathetic little research, whatever I could find in the library. I'm definitely dating myself here. The industry was doing about 10 billion a year in the US. And I believe in 2023 did 170 billion.
Wow.
So yes, it was a good industry to be in. It's been a great ride.
Yeah.
And really since I became an M&A advisor in 2009, the industry just continues to grow every single year. And it has always been strong. There's always been great demand. There's always been more money out there than there are good companies to invest in or buy. But those years, starting in about the second half of 2020 through the middle of 2022 were insane. So, because the pandemic, as you know, everybody wanted to get a dog or a cat or a bird, and then they were at home, so they're buying treats and they're buying toys, and so the numbers really just the growth really accelerated. It's pulled back a little bit, but there is no lack of interest. The interest has continued to just grow and grow because investors know this is a recession-proof business. It used to be called recession resistant, but now people are using the words recession proof because, Christy, you're a dog lover.
Yes,
Would
I am.
you ever consider not taking as good a care of your dog? You would just sacrifice.
Yep.
To make sure your babies have the best of the best. And fortunately, most of the millennial and Gen Z generation, they just feel that way.
Yeah.
And so they are driving the growth of our industry right now.
That's so interesting. When you talked about founders loving working with you, can you talk about why and what you look for when you're looking at brands and companies and founders?
Yeah. Well, I think founders like working with us because I used to own pet companies. I've walked in their shoes. I know what it's like, containers being delayed, payrolls coming up. Oh my God, this distributor just dropped me. I've got to find another distributor, or just I really understand the landscape of what my clients live in. So that's wildly helpful because there are not many investment bankers. I don't know of any actually, that have the background that I have. And then my colleague Erin is the same way. So she and I work together in every project, and she also knows the industry like the back of her hand. So I think honestly, people are kind of intrigued that we're women because I
was
think
just going to ask you, I'm so glad you're going there because I was going to ask you that.
Yeah, I'm guessing less than 10% of investment bankers are female.
Oh, for sure.
We have an all-female company, and I'm guessing that we've probably lost a few gigs because we're women, but I honestly think we win more than not because we are the software gentler, kindler. Investment banking, private equity, it's got a pretty rough reputation of being, cutthroat and just money driven. And that is absolutely not who we are. I think we have pretty high EQs. So I think that is an advantage. But what we look for, so we've learned a lot of lessons over the years of what we look for. And so 14 years later, we've kind of honed it in. First of all, It doesn't have to be a brand, but it could be a co-manufacturer, but most of what we work with are brands. Some of the companies we've sold in the last few years, Bocce's Bakery, Three Dog Bakery, Grizzly Salmon Oil, Dogswell, these are all brands. But again, like right now, I'm working on somebody who makes the products for those brands. So, but pet. Again, we're looking for companies that are profitable. Generally, they have at least 2 million to the bottom line. We look for companies that are growing. We look for companies that have decent gross margins. That is a very important thing. If you have less than like a 35% gross margin, and if you're a branded company, you really need to be closer to 50, then it's a tough sell. Customer concentration. That's one thing that, like, if 40% of your business is Walmart or PetSmart or Target, it's much harder to sell your company because banks don't want to lend money on companies where they depend so much on a customer.
Yeah.
So we really look for companies that don't have that. A good brand is going to always result in a higher valuation. If you've got double-digit growth, if you're growing over 10% a year, and if you have a good gross margin, that is it. That's a sweet spot. I call it the 3 legs of the stool. That is when you're going to get the highest value for your business. And you don't have to have all those things for us to take you on as a client, but you need to be a nice person. You need to have good character. You need to be transparent, because we have learned our lesson. 6 months into a process, we found out that our client didn't really have the intellectual property that they said they did.
Wow.
So all of this has resulted in one of the products that we offer now to our clients is an exit plan. And it's sort of, Erin, my colleague, is a certified exit planning advisor, and we put the companies through a 3 to 4 week process and come out with an exit plan. But that also lets us identify whether or not this is a company we are going to want to work with. So we like all of our clients to go through that. They don't have to, but it does help. So,
and how important is the actual founder and their personality and the fit with you guys? Does that matter to you?
oh yes, that definitely matters. We we've worked with wonderful people, and I'll be honest, some of my favorite transactions have been female founders. The Bocce's ladies, there's a company called Digging Your Dog and Super Snouts, the 2 ladies. Definitely the egos, it's a different experience, but I've worked with great guys too, and some not great guys. We had a guy who we found him a buyer. We were under letter of intent, and he got approached by somebody else for more money, and he did everything he could to just try to lie to us, drop our contract, go around us. We ended up not letting that happen, but it was his ethics. But Christy, sometimes you don't know up front. You can try, but we have gotten pickier as we've gone on through the years. But my favorite people, they laugh, they're transparent, they're authentic, they love their animals.
Yeah.
I know private equity buys a lot of companies, but at the end of the day, my favorite people to work with are the founders, because generally they started their company because they love their pets.
Yeah, that's awesome. Have you seen a lot of, like you talked about a lot of things that are really important from a financial perspective, like making sure that all the things are working and that there's some level of accountability for, right? But has that changed a lot? Because I feel like a few years ago, obviously raising money was easier, getting acquired was easier. Is it changed in pet as well, gotten harder, and you have more things to prove?
For sure, for raising money, it has gotten harder. It used to be that nobody really cared if you were going to make money to the bottom line. It was just grow revenue, just grow, spend. And that has changed, I'd say, in the last couple of years, that investors really are looking for, if you're not profitable right now, what is your path? You need to be getting there, you need to be getting there relatively quickly. And so that has definitely changed. I believe also that valuations, we value companies in terms of multiples of EBITDA, earnings before interest, taxes, depreciation, and amortization. That's the metric that's generally used for valuing a business. And while couple of years ago, most pet companies were going for 10 plus. Now to get that double digit, you have to be an incredibly premium business. So that is there's been what we call compression, multiple compression. And then finally, yeah, investors have pulled their pocketbooks way back. And it is a lot harder, but it's not impossible. If you're a good business, you will find money.
Do you think that the changes are good for the industry? Like, do you think it was too easy before for people? Yeah.
Yeah, first of all, I come from the heart of the Midwest. And for me, I have never understood how you could just spend money and just drive revenue without caring about your bottom line. It's
Mhm.
never made sense to me. I've never I've always counseled entrepreneurs to work on focusing on making money.
Mhm.
So I am actually glad to see that because I call that being more grounded in reality.
Yes.
Because at the end of the day, it's about making money. That's what business is about. So I do think it's good. I mean, I love high multiples. I like high valuations. We all, the sellers love them. The investment bankers representing the sellers love them. The buyers don't love them. So, but I don't see a significant compression. It's not like if a company was going to sell for 10, it's going to sell for 6 or 7. Maybe it'll sell for 9 times.
Mhm.
It's not because remember, there's still more money chasing good businesses than there are good businesses to be had. So the laws of economics are going to tell you there's still going to be high valuations.
Yeah, that's interesting. And talk about the industry a little bit, because where do you see this going? I mean, obviously, pet as human has become such a topic of conversation. I think we talked about this yesterday. There was an airline that actually launched that's literally devoted to that. And so it's really, I think, changing dramatically to the point where people are spending as much, maybe even more money than they spend on their kids, on their pets. So is that what you're seeing right now?
Definitely seeing that people are willing to spend whatever it takes to keep their pets alive and healthy as long as possible when they have the ability to do that. So
Mhm.
assuming you have the ability to do that, I see the trend I'm seeing, which I love because I've been a longevity hack for years, following all the players, Peter Attia, all those guys, is that's now starting to happen for dogs.
Yeah.
There's a book that came out a couple of years ago called The Forever Dog that I have loved. I have touted it. I have promoted it. It is anti-aging, biohacking longevity for your dog. Who doesn't want your dog to live as long? I mean, right?
Uh-huh.
I'm seeing products now that are really focused on the health span. There's a new one out there called Artera that is trying to be like the AG1 for dogs. I don't know if it's going to be the AG1 for dogs, but I'm like, yeah, that's great.
Yep.
So, I do think that the trend is for sure, kibble. I'm so sorry to the kibble companies, but I feel my comment is often it's going the way of the payphone people because it is ultra processed.
Yep.
We're not supposed to eat ultra processed foods, and why would we give that to our dogs?
Yep.
Now, again, there's kibble comes in a lot of different qualities. 100% sure it's not going to go away completely, but like I've been a raw feeder for years, and most of the people in my world are feeding what's called alternative, raw, freeze dried, air dried, freshly cooked, like the farmer's dog. That is those categories are exploding, and kibble is shrinking. So I see that as all very good because that's going to keep your dog healthier and your cat healthier longer.
So how would you advise, like, is there things that you've seen founders do and companies do that you would say, these are the right things to be thinking about, and there are some definite wrong things to be to be doing?
Yeah, I'd say the right things to be doing, again, focusing on the things that are going to drive value in your business, which is if you're a brand, you want to do smart things to build your brand and create brand awareness. You want to be conscious of the fact that investors are looking for companies making money. So yeah, you're not going to start out making money probably, but you don't want to make it year 5, we're going to be profitable. How about the end of year 2?
Yeah.
You know, and personally, as somebody who bootstrapped all my businesses, I borrowed money from my mother from my distribution company. I like to tell people, if you don't have to raise large
Mhm.
amounts of capital or even any capital, don't, because it's the most expensive form of capital. Equity is the most expensive form of capital. So if you can build your business organically, now if you're starting like a pet food company or something that's very expensive, that's gonna take a lot of marketing dollars and you don't have that money, yeah, it's going to need probably, sorry, that's my bird, Perry. If he does that again, I'll move him.
Okay, you couldn't even hear him.
Oh, okay, good. If you have to raise money, then you have to raise money. But I think people think that's like some glamorous thing to do. And,
Yes.
oh, I'm raising capital. No,
It's horrible.
don't do it if you don't have to. Here's what I like to share with people. The cheapest form of capital is when your vendor gives you terms. The second is like if you get a senior bank loan. Now, if you're an early stage startup, the only way you're probably going to get really good rates from your bank is if you have a lot of collateral or you have somebody that co-signs that has a lot of collateral. Then there's different forms of debt that become more expensive. And then at the top of the stack is equity. So think about that before you go out and go, oh, I need to raise money. First of all, it's time consuming, it distracts from your business, and it's expensive.
Talk about that though. You said something really interesting. I've never heard anyone put it the way that you put it, that equity is the most expensive form of capital. Can you talk about that a little bit?
Yeah, because let's say, for example, you own 100% of your business and you're wanting to scale your company and you think, well, let me just sell some equity, and you end up selling 25% of, and maybe early stage, you're only getting a small amount of money for that because you're not very valuable. So now you own 75% of the business. Well, if say you got $1 million, and I'm giving an example and I'm just kind of giving some high level basic examples.
Mhm.
Say 20% of your business, you got $1 million. Well, let's say now you, well, 25%. So now you have 75%. What in 5 years down the road, what if your company, is worth $25 million? So now you get 75% of that 25 million. And so that equity costs you 25% times 25 million. That equity costs you $625,000. But if you could get a loan and you're paying 8 or 10% interest on that, that's not gonna,
Yep.
that is, 80,000 a year. Five, so that's okay.
That I heard.
So how often do you have a bird show up in your?
Never. This is the first. Oh my gosh. Can that bird talk?
Well, he won't.
He won't.
He does a little bit,
What's
but
his name?
his name is Perry,
Oh,
P-E-R-I.
hi, Perry. Oh my God, he's gorgeous.
He's a sweetheart too. I'd love for you to meet him one day. He is such a doll. Perry,
Oh,
you want to join us? We'll see how he does for a little while.
okay. Okay.
But does that example that I made resonate with you? If you're thinking
Yes.
about $1 million, 80,000 a year for 5 years is is what, 40, 100,000, or you've just given away, much more than that. 25% of 20 million is 4 million.
Well, is there more of a risk, do you think, when you do it? Obviously when you take a loan and you're on the hook for it, is it more risky than, having investors that?
It is. Yeah, there is more of a risk. You're probably gonna have to sign a personal guarantee.
Right.
So there is, so yeah, you got to balance those things.
Yeah.
And how confident are you in your ability to grow this
Yeah.
and scale this business? If
Right.
you're really confident, like you and I would be, then,
Yeah.
do it.
Yeah.
But again, a lot of times you can't get the bank loan or you can't get enough money. So I don't want to say don't ever raise capital, but think about it. Because the example I just gave is you're giving up millions of dollars because you raised equity instead of trying to get a loan.
Yep. Yep. It's an interesting thing to think about because I think when people, at least a lot of the founders I've met, you get so excited about the idea that someone wants to invest that you might be willing to give up something that you don't actually need to give up, which I think is really interesting. But you get excited and you're like, oh, they want to invest. That must mean it's a good idea. right? But it isn't always a good idea. Yeah.
Exactly, Christy, you're absolutely right.
Yeah.
They think it's sexy and it means something
Yes.
wonderful. And, you know, when you go to sell that business and you realize that, oh my gosh, I gave up 25% of my company and now they get a quarter of my purchase price.
Yep. Yeah.
Oh,
Yeah,
yeah.
that's really wild. What other things, talk about other things that feel really important for founders to know when they're thinking about either raising or getting acquired or taking on a big investor?
So especially when you are when you're past the early stage and say you've reached a certain amount of scale and you're looking to either do majority or 100% sale, you got to make sure he's
So
charming.
cute. I can't, it's ridiculous. It's the cutest thing I've ever seen. I hope that whoever's listening goes and finds this video because there is bird kissing happening.
He's very, look at me, so
He's
charming.
gorgeous. So sweet. My gosh.
He is. He's so sweet. So you've got to make sure that your company is ready. And that, when a sale, essentially, they are going to dig and dig and dig into your business. And the most important thing, people are buying your business for the money it generates. So what does that mean? They're going to get into your books like you can't imagine. So you have to have everything nailed down. You have to have your accounting spot on, up to date. If you're a product company, you have to make sure that you can provide that a buyer can slice and dice your information every which way possible. So if you haven't been paying a lot of attention to your accounting, if you're one of the many entrepreneurs I meet that don't even know how to read a financial statement, go take a class, read a book. You got to understand your P&L. You got to understand your balance sheet. It's so important. I feel so fortunate I majored in accounting, but I'm still amazed that they're very successful entrepreneurs that have no idea what kind of money they make. I was on the phone with somebody last week. So what was your bottom line last year? Well, I don't really know. I'd have to go back and check. And I'm like, really? So know that.
I think it's such an interesting conversation because it was so easy it's easy to start a brand in a lot of ways, right? But to understand where it's going, I mean, I think there are a lot of people who are doing it with a little bit of naivete, a little bit. And some of that's good because if we didn't feel that way, maybe we'd never start brands because it's too scary. But also there's a point that you reach where you have to understand all of it. And the world is not sitting here writing checks the way that they used to be, that's for sure. Yeah.
Yeah, a couple more things I'd say is be very conscious about your hiring. I know I see a lot of people that just hire their friends and family because it's easy and they're right there, and they may not have the skill set to take your business to the next level. I'm sure you're familiar with that.
Yes, yes. And I think talk about that a little bit because I think that that's what happens. You, as a founder, you surround yourself with people who can help when you don't have any money to pay anyone. And then you have to grow. And then people start asking you really hard questions. And how can you answer them if you haven't found the right people? I think sometimes founders don't do it because they don't want people to know what they don't know and they feel insecure about that. And then sometimes it's just really hard. Those are hard decisions to make, right?
Yeah, I mean, it is. It's not a cut and dry black and white situation. A lot of it depends. Do you have money to pay an outside person?
Yeah.
Can you offer them something other, some equity? I mean, I think offering the folks that help you bootstrap a business, small amounts of either real equity or phantom equity is important. But I've seen it too many times, the people that have regretted bringing in their family and friends. So if they're the right fit, great, but chances are they're probably not. So yeah, just think hard about that. And you're going to work your ass off. A founder entrepreneur has got to be ready. Here's one thing else I will tell you that drives me nuts are founders that try to take big salaries in the first few years. And I've seen that and I don't understand it. You gotta be ready to kind of really sacrifice for a while.
Is that a red flag for you? And do you think that's a red flag for investors as well?
Yes, I do. I experienced it firsthand when a company that I invested in and I advised, and this was a friend. So I normally wouldn't do this, but I helped them raise their first $1 million of seed capital for a pet food company. And they told me they were taking, 60,000 a year in salary. I'm like, that's fine, each, there were two of them. Well, it turned out they took 120. And
Mm.
frankly, I just think that's too much for a first year entrepreneur when you're using other people's money, and they
Right.
only face like a little over 1 million. So that was very annoying. So I look for that now. It's kind of a thing. Again, I don't, every once in a while I'll invest in companies, but what we look for more is when more companies are more mature. And if the company's growing and they're making a lot of money, oftentimes they're not taking enough. We're like,
Mhm.
hey guys, when we go to sell your company, you're paying yourself under market, so you're going to get dinged for that.
Yeah.
Because if they go to replace you,
Yep.
they're going to have to pay more. And so there's a mechanism that we have to adjust your earnings, and we have to subtract the extra amount of. So yeah, but I think what I'm really saying is for early stage founders, be prepared to be lean and mean for a while.
Yeah. Yeah. That's hard, right? Because a lot of people are coming from these jobs where they've decided to leave a big industry or a big corporate job to start
Yeah.
something that they really care about. And then all of a sudden it's not so easy.
Right.
Yeah.
Yeah, exactly.
Yeah. But I guess passion, I mean, passion takes the place of a lot of things, right?
Yes, one of my favorite sayings is passion and persistence go hand in hand. So when you're passionate about what you do, you'll be able to, weather the storms, get through those potholes a lot easier if you love what you're doing, which is what's great about the pet industry, Christy. What it boils down to is that people really love them. It's not like we're making, a paper clip or, a mug. We are really making a difference in the lives of creatures that we love. So I
Yeah.
think that does go a long way towards what founders kind of slogging through the beginnings.
Um, I think there's so much good stuff in here, but I want to ask you one more thing. Are you seeing any trends or new things that are happening in pet that you wanted to like? Is there anything that you're seeing at an early stage that we might not have visibility to that's coming?
Well, I think I mentioned earlier some of these longevity
Yes.
products
Yes.
and the um, the the complete 100%, not 100%, but majority shift towards these alternative foods,
Yeah.
freeze-dried, raw. I recommend reading that book, The Forever Dog. That will give you a lot of the trends. They're coming out with a new book this month or next month called The Forever Dog Life. Again, I'm not on their payroll. I don't get any money for this, but I want more, we all want our dogs to live and cats to live as long as possible. I think that anything that has to do with enrichment that keeps your pets busy and active, nobody's really figured that out yet.
Yeah.
And it doesn't, I don't, there's nobody that's gone. There's a new company called Guru that's launched at Global Pet Expo that has a lot of really interesting products. So they're starting to fill some of that gap. And then, I would say one of these days, pet tech is going to break through. It hasn't in the last 10 years. They've been trying, but there isn't any one or two products that people are, we don't have an Apple Watch for the pet industry. So I'd like to see that, but I haven't yet.
I think that some of the that's interesting that you say that. I feel like I've seen people doing it like off label, right? Like putting Fitbits on their pets and trying to see how many steps they get and stuff like that. I just wonder
I
if
haven't seen that.
really I have. I've seen people put Fitbits on their pets. And
So
I
funny.
wonder if they ever will be able to connect that to anything useful, right? Because it's interesting if you connect it to longer life or better bone health or whatever, all those things that we connected to in humans. I wonder when that'll happen with pets.
It will happen.
Yeah.
It
Yeah.
just is taking a long time, but it
Yeah.
will. Yeah.
Yeah. And I think it's because they can't, right? They can't talk. All we can do is collect the way that they actually, how they live, right? And how healthy they seem and how much longer it
Yeah.
lasts. Yeah.
Yeah, no, there's no shortage of companies out there trying to do that and break through. And there's many, 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 many of them, but there hasn't been one that has just really come to the forefront and gone, okay, this is it. So I do hope that happens,
Me
but
too. Me too.
it's so amazing how things have changed in the last, 37 years of how we treat our pets like our children, which they
Yeah.
deserve to be.
They do. They do because they're the sweetest and best,
They
as
are.
your bird seems to be evidence of, which I love because we don't talk about birds that much.
Right. Yeah, there's not a lot of us that have them, but
No,
that's another whole subject. And when you come visit, you'll have to meet Perry.
I
So
cannot wait. I can't wait. Well, thank you so much, Carol. This has been fantastic. Really
Yeah.
awesome. I can't wait
Good.
to get it out there.